Welcome. Today is Wednesday, August the 21st, and taking a look at the three markets which had relatively low volume, which is not a good sign because we've gotten used to seeing fairly average volume with a few days being above average trading volume. And now we've returned back to something that we haven't seen in a week or so, and that's lower volume. But the Dow was up, the NASDAQ shot up, and the S&P everything opened up, and then the Dow just drifted along, finishing up 240 points, no small feat. NASDAQ finished up the same percentage, but it basically just went flat the rest of the day, as did the S&P 500. Now, what we didn't see at the end of the day was the big selling going on, although there was some of it taking place right around 2:30. You can see the market started dropping around 2:30. So the selling, people taking gains on this big gap up. This is where we closed yesterday, and this is where we opened in the S&P 500. This green line is where we closed yesterday in the NASDAQ, and we opened at the same spot, but we shot up immediately at the open. And of course, the Dow opened up big over its close yesterday as well. So we saw the profit taking happening around 2:30. Advancers led decliners by 70% to 30%, which is going to move our McClellan oscillator, which had returned to neutral, back up a little bit. I don't think it's going to go as high as this point, but we're going to start seeing this kind of chatter around the midline. And it could break either way, as you know, so there's no definitive sign here in the McClellan. I want to show you just an article that I was looking at, or an email that I got from Sentiment Trader. This is a free subscription saying that gold beats stocks and it's a double-digit jump. But what he's saying is that if you see the rise in gold versus the rise in the S&P 500, gold is now outpacing the S&P 500 this year, is a rolling year-to-date percent change. And while that's considered, people buying gold is considered risk aversion, it hasn't necessarily been a negative signal. Stocks and gold mostly rose after similar behavior. So both of them still could be in a sign for going up. There was one other article that I read, and that was caught my eye on the FinViz page right down here. And that is, after yield curve inverts, here's how stock markets tend to perform since 1978. The key thing here is that we're now showing a negative spread between the 2-year and the 10-year, and the last time we saw that was in this previous recession, 2006 through 2008, and that lasted for quite a while, and then the market just took off. So we don't see the market in times like that actually dropping. We see what we saw this isn't the market rising. This is the difference in the 2-year and the 10-year note. But we know that right around here, middle 2009, we saw the market bounce back. I mean, that's still a couple of years. But anyways, the so-called inversion, main measure for the yield curve, has preceded the last 7 recessions. And that's what's got people spooked. But I think now people are realizing that there really won't be a recession because the consumer is still strong. Corporations are going to hurt profitability probably the next time we hear on earnings in October. We're going to find the hit from the tariffs because the benefit that they got from last year's tax cuts is gone. It's out the window. It's been utilized. Now let's take a look at the S&P, up 24 points, but all it did was bring us back to where we were on Monday, and we're right behind the 50 moving average, so that's proving to be a point of resistance. We've had 3 clear jumps off the 68.1% move from this point to this point. This is a different these here are different fibs. So these fibs right here correspond to this wave, and 68.1 was the bounce point. But now we're stopped at the 50. So let's take a look tomorrow. I still believe that we are going to move up and down in this cloud, but I believe now that it's going to be in a generally upward motion. So we're going to put a little channel here so we can watch this in the future. We're going to put this little channel here and say that we think that the stocks are going to move in the cloud, but generally in this upward direction. And we're going to watch that over the coming days. Apple up 239, stopped at the 78.2, stopped dead on the 78.2% Fibonacci. So it is 78% of the way back to this top here, this high of 233. We're back to 78%. Now when we break that 78%, it's usually a sign that we're going to go all the way back to 100, but it didn't happen here. Here we broke it one day and then retreated immediately. Here and again we broke it that day, but we retreated immediately again. So the 78% has stopped. There's been a stop line 1, 2, 3 times, and it's happening yesterday and today. Caterpillar, I tweeted that I bought more Caterpillar because I think that it's a good deal right now. It's undervalued. Volume is pretty low, so there's not a lot of people who did what I did buying Caterpillar today, but I like the stock. I just had the dividend of $712 dropped into my account this morning, so I bought some more, and I want to be part of that $1 dividend when it comes around in the next quarter. And what did I pay for Caterpillar? Let's see, I paid $118.62, and we finished at $117.68. But we're still up $1. It's just that I bought over the 8 EMA, and we came down and we settled below the 8 EMA. I just had a feeling that the 8 EMA might be support, and it was not. We finished below the 8 EMA. Gold didn't have such a bad day. Gold miners, we had a perfect doji indecision between the buyers and the sellers. Let's take a look at the volume. Very low volume, so no commitment by buyers and sellers, and you see that in the price, right between the high and the low. WDC 55 is sort of just channeling here, and if you want, you could see maybe a head and shoulders, but I'm not going to dwell on that too much because I think WDC is getting some reprieve because it's probably not being prevented from doing business with Huawei yet. Another flip-flop by the White House. All this talk about stopping Huawei. The government just gave companies a bit more time to wrap up doing business with Huawei. That's just another way of saying we changed our minds. Whirlpool is the beautiful little stock. Love that stock, and if the interest rates go down in September by the Fed, and people continue to put money into their homes, as we've seen with Home Depot and Lowe's earnings, Target, good earnings in retail. Whirlpool, although Target doesn't sell Whirlpool, but Home Depot and Lowe's do, and that's going to be good news for the stock. The stock today hit the top of the cloud perfectly, and then came down. It even exceeded the 50-day simple moving average. So the top of the cloud is where sellers were taking profits, not at the 50 simple moving average like you might suspect, but at the top of the cloud. Again, just showing you the importance of the Ichimoku system. Now, Walmart suffered by only 3 cents today, but has fallen out of this flag or pennant that we've drawn. And I suspect that that's because Target had such good earnings. Now, Walmart had good earnings, but Target is really the competitor for Walmart. We've seen lower than average volume for the last 3 days, held up by the cloud. So I'm going to continue to hold my 10 spreads. which expire on September 27th, but I've now lost $150 on that trade. I can lose a maximum of $700, but I can make a maximum of $1,350. So the risk reward is still on my side, and I'm going to wait a little bit longer. But if we drop tomorrow, I think I'm going to get out of Walmart. Walmart is a stock that does well when the consumers are pinching pennies, and that may not be the case. They say the consumer is going to save the economy. So that's a wrap for today. Just where do we go tomorrow? I still believe we're going to be in this channel where we're going to move up, but I believe we're going to move up and down in that channel. The gap should provide support. It wasn't yesterday, but the 8 EMA was. The 8 EMA is moving up. So the 8 EMA and the top of the gap should provide support for any down motion tomorrow, but we could end up a little bit higher. Tomorrow will be Thursday. Thank you for paying attention, for watching rather, and thank you very much.